The Nabers group was originally shared with me by a tax attorney, John Heyer, that had really great things to say. I was able to personally open an account with some family with them, and so I had a really great experience. I think I like their platform. I like the flexibility. I like just their client favorable approach and fees. It was just a good as good of experience as I've ever been able to have with anybody, which is why I'm excited to share with them today.
Thanks so much, Keith. Hi, everyone. I'm Rachel Nabers from Nabers Group and solo401k.com. I have a presentation ready for you guys. So let me go ahead and share my screen and we will get right into it. You should be able to see my screen now. I'm an investor as well. So before we dig in, of course, I just want to go over the disclaimer. We are going to be talking about investments. We are going to be talking about retirement plans. But of course, this is for educational and informational purposes only. Nothing that we're covering today is tax, legal, or investment advice. And I want to give you a little bit of background about us, just as we're getting into this. We launched the IRA LLC in 2003, and we launched solo401k.com in 2006. We're an IRS-approved document provider. So what that means is that we help self-directed investors to take control of your own retirement funds. We do all the boring back office stuff. We work closely with the IRS and the Department of Labor to ensure that your retirement plan documents are updated on time. And of course, we get the most up-to-date compliance direct from the source. Now, you might have not heard of solo 401ks before, although it sounds like you guys have maybe been chatting about this a little bit. The solo 401k is really special, and it is totally legitimate and approved by the IRS. You can see here they actually have an entire page on their website dedicated to our plan, this solo 401k structure. And just for further proof and verification that we are on the IRS good list as far as being an approved provider. But what we do is we specialize in something called checkbook control. And what that means is we don't handle your money. We don't choose where or how your funds are invested. The solo 401k is really all about freedom and flexibility. You're in charge of your retirement funds. You get to choose where and how they are invested. And one of the awesome things about a solo 401k is there's so many different investment types to choose from. Of course, normal investments like stocks, bonds, ETFs, and funds are always on the table. But you can also dig into any number of alternative assets like real estate, and this can be any type of real estate deals. Commercial properties, syndications, tax liens, deeds, etc. REITs, crowdfunding, angel investing, VCs, early stage startups, and then alternative assets like Bitcoin and crypto, which is incredibly popular now, gold and silver, private equity deals. Really, if you can imagine it and the IRS is cool with it, then you can hold it in your solo 401k plan. And what we've tried to do is design this process, which can be incredibly complex, and distill it down so that there's easy action items for you to take to get to the fun stuff, which is investing. So there's really a 4-step process to making things happen. The first is to establish your account with us, and we'll go through that setup process in just a bit. Once your solo 401k is established for your small business, then you want to fund it, and we'll talk about how to get money into the account. Once the account is open and funded, you can start choosing your deals and then make your investments. It really is that simple, but what that does is it opens up a whole world of alternative investments and ways to really grow your retirement funds outside of the traditional path. And I think what we're all seeing recently, especially with this money printing and the way that the economy has had to do so much stimulus, we've got to find alternative paths to what everybody was doing in the 70s, 80s, and 90s. We've got to find alternatives if we're going to have a sustainable retirement future. So just as a bit of background, a solo 401k, it's really a company retirement plan. This might also go by the name of Qualified Retirement Plan, or QRP. It might be called an employer-sponsored plan or even just a 401k. And the way that 401ks work is that a company sponsors them. There's a company, and that company can have a retirement plan for the benefit of its owners and employees. A solo 401k is just like a normal 401k, but it's shrunk down small and specifically catered to small businesses. And I know, Keith, that your group here is a group of small business owners and accredited investors. So chances are that most, if not all of you, already qualify for a solo 401k. To qualify, you need two things. You need the presence of self-employment business activity, and you need the absence of full-time W-2 employees in that business. One exception to that rule is if you are a full-time W-2 employee of your own business, that's okay. If your spouse is a full-time W-2 employee of your business, that's okay. What we're looking for here in these owner-only plans is we want you and your spouse to be the owner of a small business. You're running your business, you're making money, but there's no other employees in the mix. Now, later on, we can talk a little bit about the nuances or the idiosyncrasies of part-time employees, other owners other than you and your spouse. Those are all possibilities that we can work within. But at a high level, a solo 401k is designed for an owner-only business. The business structure can be anything: sole proprietorship, single member LLCs, multi-member LLCs, professional service corporations, nonprofits, S Corps, C Corps, partnerships, limited liability partnerships. All of these structures are on the table. There can sometimes be a common misconception that you have to have an LLC in order to have a solo 401k. That's not true. In fact, a sole proprietorship is some of the most common structures for small business owners. That means that you are earning 1099 income, you're a freelancer. If you've got self-employment activity and income on your tax return, then you can have a solo 401k plan. If you work full-time in your small business, then that's ideal, that's excellent. We believe that every owner-only business should have a solo 401k to get the most out of your tax benefits. But if you have a full-time job in addition to your small business, that's okay too. Working on your small business part-time or on the side is not a deal killer. It's okay, in fact, to have a full-time normal job in addition to having your small business on the side, and you still can qualify for a solo 401k, even if that's your side hustle. In fact, the IRS is totally okay with you contributing to multiple retirement plans at the same time. So sometimes we have clients that will come to us and they might be contributing to a current employer 401k plan. They also want to establish a solo 401k plan. And there might be a few reasons for doing this. First is that you can tax shelter that income that you're earning in your small business on the side. And second is your investment options in a solo 401k are often going to be far more open, flexible, vast than what you might be offered in a traditional company retirement plan. And some common business examples that we see for clients that come and establish plans with us: realtors, attorneys, CPAs, software developers, consultants, writers, Amazon resellers, bloggers, hairstylists, virtual assistants. It's funny that you brought that up, Keith. We actually have a lot of people that come from Upwork, Freelancer, Guru.com. They're earning 1099 income, and that qualifies for a solo 401k. Even if you have a side hustle, you're driving Uber or Lyft part-time, a small side business part-time or weekends on the side is totally acceptable, earning that 1099 income. But again, if you are running your business full-time, then not having a solo 401k means you're leaving a lot of money on the table, both in extra taxes that you're probably paying unnecessarily, and not capturing tax-deferred or tax-free growth in your investments. So we're going to come back and talk about both of those things. First, let's discuss how to fund a solo 401k. How do you get money into this thing? There's two ways to fund a solo 401k plan. The first is rollovers from other retirement plans. And the second is contributions from your business earnings. A solo 401k is really similar to an IRA or a normal 401k in that it can accept incoming rollovers from almost any other retirement plan. If you've got rollover IRAs, traditional IRAs, previous employer 401k plans, 403bs, TSPs, 457s, pension plans, defined benefit plans, they can all roll in to a solo 401k. A solo 401k therefore becomes a really powerful tool to consolidate retirement plans. If you've got 4 or 5 IRAs laying around, maybe a couple of previous employer 401ks, consolidating those into one retirement plan can help you have a larger pool of investment to draw from, which then unlocks the ability to get into investments that you might not have otherwise had if the retirement accounts are kind of out there piecemeal. And our team is going to help walk you through everything. We're going to walk you through something called a direct rollover. This is also known as a trustee to trustee transfer. Direct rollovers are not taxable. When you move money from an IRA to a 401k, this does not show up on your tax return when it's done right. And that's part of what our team helps you to do. You can do unlimited incoming rollovers, as many as you want, as often as you want. And our team is going to walk you through the entire process. Remember, we talked about consolidating your retirement plans. So what that can look like is that you can move funds from various retirement plans into the solo 401k, which then allows you to have, again, that larger pool of investment to draw from. And Keith was mentioning our tech at the beginning. We are self-proclaimed, tech nerds. We love to utilize technology wherever possible, especially in the finance world. Sometimes tech can be really behind the times. So that's something that we've worked really hard on, is to make it as easy as possible to distill down these really complex topics of how can you be in charge of your own money and just make it a step-by-step process. The second way that you can get money into a solo 401k is through contributions. Just like you make contributions to an IRA or maybe a 401k at a job, you can also contribute funds to a solo 401k plan. If your business is making money and compensating you as an employee of that business, you can contribute some of that money into a solo 401k. And Keith, you brought up that you guys had been, sort of comparing and contrasting different retirement accounts, Roth, pre-tax, IRA, 401k, et cetera. With our solo 401k plan, we kind of mush it all in one for you. So all solo 401ks with Nabers Group automatically include a pre-tax and a Roth component. You don't have to choose one or the other. You get both. And what that also means is that your contributions that you're making to a solo 401k can be pre-tax, that is tax deductible, or after tax, and that is Roth. And our team, again, will help walk you through how to make those contributions to a solo 401k plan. We can see that then the pot of money in your solo 401k continues to grow. You're making these rollovers from other retirement plans. You can also add funds in from making contributions from your business. Now, one thing that's really, really special about a solo 401k is that the contribution limits are really, really high. They're very generous. In fact, for 2020, you can make a maximum contribution of $57,000 per person per year, 58 grand for 2021. If you're age 50 or older, that number jumps up. For 2020, it was 63,500. For 2021, 64,500. And the reason why I'm including 2020 numbers is because if you have not yet filed taxes for your business for 2020, You can still today set up a solo 401k plan for your business and make those contributions, get that tax deduction, or start tax sheltering that income now, even for 2020. If you have an entity, a multi-member LLC, an LLC taxed as an S Corp, and you filed an extension to file your taxes, then you have until September 15th to set up a plan and make contributions. You just need to make those contributions before you file your tax return. If you have a C Corp, then you have until October 15th to set up a solo 401k and deposit your contributions even for 2020. Contributions are based on your net compensation. That's net of payroll taxes or net of self-employment taxes. The more money you earn, the more you can contribute. And we have extensive contribution calculators that are available for you. You can compare pre-tax Roth contributions. We have retirement account calculators, lots of tools that are available for you. So you can really play with your numbers and find out what makes the most sense for you. Keith, you brought up John Heyer, who is a close team member of Nabers Group. We love John. We work with him very closely. John is not only an attorney, but also an accountant. And he'll tell you that there really is that sweet spot where you want to pay yourself enough so that you are maximizing your contributions to a 401k plan without paying yourself too much that you're getting diminishing returns on those contributions. Our contribution calculator is a really good first step to start plugging in your numbers and seeing how much you can contribute based on your earnings. At this point in the conversation, this is usually where people ask me, okay, this is great, Rachel, but where is this money actually going? You said in the beginning, Nabers Group doesn't handle my funds. Where am I actually sending these rollovers and contributions? And one of the beautiful things about a solo 401k is you're in charge of where you're going to hold these funds. You might keep these funds in a bank account or a brokerage account or even a crypto exchange account. Each of these accounts are connected to your 401k with us and titled in the name of your 401k trust. And we'll go over that titling in a little bit. If we take a step back and we're looking at this funds flow, we've done a couple of rollovers, we've made a contribution into a solo 401k. Let's say the money is landing in a solo 401k bank account that we can help you to establish. Then once the funds are there, you can go ahead and start investing. That might mean that you send funds to an outside investor, make a private investment in something like a private note. This might also mean that you're wiring funds from your 401k bank account to an exchange account connected to your solo 401k. Again, you are the keeper of the keys, right? You get to decide where and how these funds are invested, in what allocation you're making these investments, how often you're making these investments. You are in the driver's seat and you get to decide how you want to structure your portfolio. I want to pause here for just a moment and talk about the Sep Ira versus a solo 401k. Sep IRAs are awesome. We really have nothing against them. It's a wonderful tool, especially if you have employees. But the way that I like to think about retirement accounts is I really think about them as a spectrum, and they've been evolving as we're learning more, as the rules and regulations are changing. And right now, the solo 401k is and has been for about the last 15 years, our pinnacle. It's the pot of gold at the end of the rainbow of the evolution of retirement plans. And Sep IRAs were awesome. They certainly served a purpose for their time, in the 80s and 90s. But now the solo 401k is really, the it girl when it comes to retirement plans. And there's a couple of reasons why. On its surface, the Sep IRA and solo 401k appear like they might have some similarities. For 2021, you can put $58,000 in a Sep IRA. You can also put $58,000 in a solo 401k. Same numbers, doesn't seem to have a big distinction. But if we dig into how that money is going in to a solo 401k, we start to see some real differences. A Sep IRA allows you to make employer profit sharing contributions. And those are typically capped at 25% of the earnings. The solo 401k offers this type of contribution, same amounts up to 25% as well. So the Sep IRA and the solo 401k, they're really neck and neck there. However, then that's where things start to diverge. So the solo 401k also includes something called an employee salary deferral contribution. What's really cool about an employee contribution is you can put in up to 100% of your net earnings for the first $19,500. Where this really starts to make a difference is, let's say you're making $100,000 in your business. You've got an S Corp, you're paying yourself 100 grand as an employee of your own business. With the Sep IRA, that 25% means you can put 25 grand, 25% of the 100,000 into a Sep IRA. Now, that's nothing to sneeze at. That's awesome. But when I look at a solo 401k, I can actually put in $44,500 of that 100 grand. Why? Because I can put in that 19,500, that 100% of my compensation, and then another 25% for that employer contribution on top of that. So you can actually make less money or pay yourself less, which then results in less payroll taxes, and put in even more to a solo 401k. If you're age 50 or older, a solo 401k allows catch-up contributions. That's an extra $6,500 you can put away, tax deferred or tax free with a Roth structure. The Sep IRA does not have catch-up contributions. Our solo 401k automatically includes a Roth component, a Roth 401k built right in. Sep IRAs do not have a Roth component. That's, important if you want to grow any of your gains tax-free. The solo 401k also includes a participant loan. This is a really special feature of a solo 401k. In essence, this is a tax-free loan. You can take of up to $50,000. That's $50,000 you can take out of your 401k plan. It does not get added to your income for the year, and you can use those loan funds for any purpose. You have 5 years to pay that loan back. 100% of the interest earned on the loan goes right into your 401k, does not go to a bank or a middleman. And this feature is not available in a Sep IRA. And finally, something near and dear to my heart as an investor is Sep IRAs are typically, tied to a custodian, which means they're going to be limited in the scope of what type of investments they'll allow. Usually Sep IRAs are going to be mostly your Schwabs, your Fidelities, your TD Ameritrades, and they're fine. They totally serve their purpose. But a solo 401k is going to let you have access to all of those traditional equities investments and more in the entire gamut of alternative assets. So a Sep IRA is not going to hold real estate, not going to hold Bitcoin, not going to let you get into private equity or private placements where you can do all of that and more with a solo 401k. I think it's important to just do that quick touch on Sep IRAs versus solo 401ks, because if we're talking about self-employed people retirement plans, then the Sep IRA is naturally going to be one that we're going to want to talk about. Okay, now let's get into the nitty-gritty of how to do some of these investments with a couple of different asset types. The first thing we'll talk about is investing 401k funds in real estate. I'm a real estate investor. I love holding properties inside and outside of my retirement plan, and I like to get into different types of deals. Fortunately, with a solo 401k, again, pretty much if you can dream it, it's possible to do in a solo 401k. I'm talking single family rentals, duplexes, triplexes, buying entire apartment buildings, getting into syndication deals, investing in tax liens, deeds, foreclosures, mortgage notes, both secured and unsecured, raw land, farmland, commercial properties, office spaces, all of it's on the table for a solo 401k to invest. If we go back to that funds flow and we look at how we did a rollover and then we made a contribution, now let's see how we can invest those funds into a property. And I know this is going to seem kind of silly, but it really is as simple as sending a wire from your 401k bank account to the closing table, and then your 401k taking title of the property. Let's say that this is a single family rental. My 401k trust is the owner, right? Is listed on the deed of this property. Those rent checks that come in each month, ACH deposit or actual physical check. If your property manager lives in 1996, like one of mine does, they actually mail me a check every month. I just deposit that check or receive those ACH direct deposits right into the bank account connected to my 401k trust. What that means is that all of that rental income is going to grow tax deferred. I'm not counting that rental income on my tax return at the end of the year. That rental income is sheltered because it's owned under the asset of the 401k trust. Now it goes both ways, right? If I have expenses, let's say I need a new boiler for this single family rental, I need to send the funds from my 401k trust bank account to the property manager or whoever is taking care of the repair. I cannot pay personally for that new boiler. It's my 401k trust that owns the property. The 401k pays the expenses. The 401k receives the income. Let's talk about a little bit of a deal walkthrough of investing in a syndication. Apartment syndication deals are really popular now. It's a nice way to get into a larger deal that you might not have otherwise had access to. If someone's buying an apartment building or a block of apartment buildings for several $1 million and you don't have that cash liquid or want to do a mortgage with your 401k for that amount, then what you might do is invest as a limited partner in a syndication. So in our example, we've got David Jones. David wants to invest his 401k funds into a syndication deal. And he's got a solo 401k with Nabers Group. His solo 401k is called Jones Investment Trust. We've helped him set up the paperwork, open the bank account for Jones Investment Trust, do a rollover contribution. He's got plenty of funds in Jones Investment Trust bank account to do this deal. As a trustee for Jones Investment Trust, David invests $100,000. Remember, I said you're the one in direct control. You do not call Nabers Group. We're not sending the funds for you. We don't need to sign off on these deals. We're not approving or denying your transactions. You're an adult. You're running your own business. You can do the due diligence and then decide whether or not this is a valuable investment for you. And once you have made that decision, you can execute on that investment without delay. David's going to fill out the subscription agreement, the PPM, in the name of his investment, Jones Investment Trust. Because remember, his 401k trust is actually the one that is the investor. And I'll just pause here for a moment. When the Nabers Group team is establishing your solo 401k, part of what we do is we get a tax ID number from the IRS specifically for your 401k plan. This is a different tax ID number than one you might already have for your business. Why do we do this? We want to make sure that your 401k has its own designated tax ID number, also known as an EIN, Employer Identification Number, so that when your 401k is opening bank accounts, when your 401k is opening brokerage accounts or crypto exchange accounts or buying properties, you're using that special 401k tax ID number on all of those accounts and investments. When we get the tax ID number as part of your 401k plan setup, we code that tax ID number in the IRS system as a 401k plan. Therefore, when the 401k is doing these investments, opening bank accounts, moving money around, as long as the 401k tax ID number is connected to the investments, to the bank accounts, to the brokerage accounts, the IRS knows not to expect a tax return. The IRS knows not to expect taxes. And the IRS knows not to expect that income to get added to your personal tax return. So this Jones Investment Trust bank account is going to have the special tax ID number that we obtain for Jones Investment Trust, which the IRS knows is a 401k. And when David is completing the subscription document, the PPM sending funds, Jones Investment Trust is the investor. And Jones Investment Trust, that tax ID number is on the PPM or on the subdocs. So when David sends the wire from the 401k trust bank account to the investment sponsor, to the syndicator, and he receives the limited partnership agreement or any of his countersigned subscription documents, it's going to show the 401k trust is the investor with the 401k trust tax ID number on the investment paperwork. This is important because later on in the life of the investment, as those distribution checks start to come in, just like I was talking about with my single family rental, the property manager either sending me a check payable to my 401k trust or the ACH direct depositing that rental income right into my 401k bank account. The same thing happens here with David. When those distributions start to come in, the investment sponsor, right, the syndicator, the general partner, is going to deposit those funds right into Jones Investment Trust's bank account. When the K-1 comes out at the end of the year, that's the tax form that comes out for hedge funds, private placements, syndications. When that K-1 is distributed to investors at the end of the year, that K-1 is going to include that special 401k trust tax ID number that Nabers Group got for you as part of your plan setup. And that tells the IRS, who also gets a copy of this K-1, hey, this investor is a tax-exempt organization. They got this money, but the IRS is not expecting a tax return. The next investment class that we'll talk about, which is probably the most popular right now. It used to be that real estate was really the darling of these self-directed investment accounts. That's changed over the last few years. And now everybody is bonkers for Bitcoin. And fortunately, Nabers Group, we've been helping clients invest in Bitcoin since April of 2013. Our first investors started getting into Bitcoin when it was about $70. I personally started investing in Bitcoin when it was about $300. Needless to say, those people that have been, following our newsletters and things like that over the last 8 years are pretty happy with how that portfolio has turned out. So yes, your solo 401k can also invest in crypto and Bitcoin, and I mean all crypto assets. So if it's available in the public market or private markets even, then your 401k can hold those crypto assets. One little note of caution, we get this question probably once a week now. We do not recommend that you use the 401k to buy mining rigs. So there's a lot to mining. It may be considered a business. A 401k, if it invests in a business, will trigger business taxes. There's a lot to that. So in general rule, just buy these crypto assets, buy and hold the assets. Don't try to get into mining. Now let's talk about a couple of different ways that you can buy and hold crypto in a 401k plan. The first is what we call DIY, right? This will be the do-it-yourself purchase and storage path. Step 1, open an institutional account at an exchange. And when I say institutional account, I mean do not go to Coinbase.com. Coinbase.com is specifically for individuals. If you want to have your 401k trust open an account, it needs to be a business account or a corporate account, titled the name of that 401k trust, and using that 401k trust tax ID number. Remember, we just talked about with the real estate investment, the way the IRS knows that these assets are treated as tax deferred or tax free if you're holding in Roth is all coming back to that tax ID number. When you open like a Coinbase Prime account, it does not allow you to put in an EIN. You can only put in an SSN, right? You can only put in a social security number, which is tied to an individual. So you want to open institutional accounts for the 401k trust. There's Coinbase Prime instead of just Coinbase, or Kraken Institutional, Gemini Institutional, Binance US, etc. And we have a lot of helpful guides that walk you through exactly how to get these accounts open the right way for your 401k trust. So step 1, open the right account. Open an institutional account for your 401k trust. Step 2, buy crypto. Wire the funds from your 401k trust checking account and then start buying the assets. And this might be a 2-step process. So if you've been collecting money in the 401k bank account rollovers, contributions, you might first wire those funds to the 401k crypto exchange account, and then you can purchase Bitcoin and hold that Bitcoin or other crypto assets in the 401k crypto exchange account. So again, just to kind of do that one more time, you've got money sitting in your 401k bank account for the trust. You got the money in there from doing a rollover or a contribution. First thing you'll do is wire funds from your 401k bank account to your 401k crypto exchange account. Let's say this is with Coinbase Prime. You send the wire from your 401k bank account to Coinbase Prime for your 401k trust. And then now that the money is on the Coinbase Prime platform, you can start to do your trades. And now your 401k is actually holding on to those crypto assets. After you open the exchange account, buy your crypto, the next thing you're going to do is store it. You can store it on the exchange. Be careful. Sometimes there's hacking attempts, or you can use an offline hardware wallet like a Trezor or a Ledger. We also have a professional storage program as an alternative. We can get the account open for you in about 1 business day. Funding is very similar. You just send a wire from your 401k trust bank account to the professional storage program, and then our team will place your trade and professionally store the crypto. It's fully insured. If you're really technologically savvy, if you've been a crypto investor for a long time, DIY, fabulous. You get to store your own keys. You get to decide where you want to hold those assets. You get to choose which exchange you want to use. A con of the DIY route is it can be a bit slow to open these accounts, anywhere from 3 weeks to 4 months to get the accounts open. And of course, there are security concerns, especially if you're not technologically savvy. Unfortunately, we've had clients come to us after they worked elsewhere, and they have lost their assets. Crypto is a digital bearer asset, so you need to be really careful about those security concerns. If you're newer to the crypto space, our professional storage options worth considering. There's far less security concerns because we manage everything professionally and it's fully insured, and we get the account open in 1 day as opposed to 4 months. However, there are platform fees. These are slightly higher than the transaction fees you're already paying on exchanges because we need to cover the storage and insurance costs. Finally, let's talk about investing in private placements, private equity, PPMs, things like that. Your 401k can invest in private equity, private debt, pretty much any investments that are not available on the public market, pre-IPOs, startup investing, angel investing, crowdfunding, all is available to a solo 401k. And the process is going to be very similar to what we've seen for real estate and investing in crypto. Establish your account with us, fund the account, identify your deal, do your due diligence, and then invest. So if you've got those funds, for example, in that 401k bank account, you've collected funds from rollovers, contributions, then it really is as simple as sending funds to a crowdfunding platform or into a PE deal, and then having that asset be included in the records of your solo 401k plan. Depending on how the deal is structured, you might receive ongoing dividends or a cash payout in an exit. Again, just like with that syndication deal we talked about earlier, the investment sponsor is going to issue a K-1 at the end of each year, which should include the trust tax ID number for the 401k. No tax return is due, even in a liquidity event. And there are no capital gains on the 401k investment. I'll repeat that, because if you were someone that got in on a pre-IPO deal, for example, with Facebook, Twitter, Uber, Lyft, etc., and you did it with a 401k, there's no capital gains on that liquidity event. No capital gains if that company goes public. This can spell a huge windfall in profits for your solo 401k. Now, before we wrap up, I want to touch on prohibited transactions, because while the solo 401k is a lot of sunshine and rainbows, it's still a retirement plan governed by the Department of Labor and with rules to follow from the IRS. So it's important that we know some of these rules. It's very important that you and retirement deals stay separate. If your retirement funds are in a deal, you aren't. Now let's break these down to those 3 asset classes that we talked about. If you're buying real estate with retirement funds, you want to have an unrelated third party complete any necessary repairs or maintenance on the property. You are not allowed to put in any sweat equity on the deal. I've worked with a lot of real estate investors over the years, and they've said, like, I'll just do the boiler myself. I'll repaint the apartment. I'll redo the carpets, save some money. This is a prohibited transaction. You cannot do any work on a property owned by your 401k. Similarly, there are parties that are prohibited from transacting with your retirement plan. You, your spouse, and your lineal ascendants and descendants. That's going up and down your bloodline. Parents, grandparents, kids, grandkids, all off limits. Never rent or sell a property owned by your 401k trust to any of these people. They are off limits. Let's talk about prohibited transactions in crypto. A little more amorphous here. These are more intangible assets. Never transfer personally owned crypto from yourself to your 401k. So remember, we talked about you can't just open a Coinbase.com account. That's for individuals. So if you've already got some Bitcoin on a Coinbase account, but it was open for you, you cannot transfer those assets into a 401k trust structure. Similarly, never sell crypto to or from your solo 401k to or from a disqualified person. So your 401k cannot buy Bitcoin from your mom. Your 401k cannot sell Litecoin to your daughter. These are off limits. And finally, never commingle personal and 401k owned assets in one account or on one account in a hardware wallet. Finally, let's talk about PE, prohibited transactions, when you're getting into the private investment space. Never invest your 401k funds into a company that you own directly. You cannot be more than a 10% owner. And never invest your solo 401k funds in a company owned by a disqualified person. So again, your 401k cannot invest into your mom's startup, right? Or into your son's accounting firm. There's certain people that are off limits from your 401k plan. So how we can help, we're an IRS plan document provider. It's our job to do the boring back office stuff as far as your paperwork is concerned. We've been in this industry for a really long time. This is our passion, empowering and educating small business owners. We love to do ongoing trainings like this. We host webinars several times a week, specifically focused on new account holders or Q&As, so that we can make sure that you get the help that you need. As Keith mentioned, our pricing structure is incredibly competitive. The setup fee is a one-time fee of $3.99, and we have an annual maintenance fee of $99 per year. This includes all document amendments, restatements, changes in plan language, anything that comes down the line from the IRS. We include the first year of annual maintenance in your setup fee, so you can get started for $498 flat. If you've got questions, please feel free to post them into the chat. Keith, I think we have about 10 or 15 minutes for some Q&A if you'd like. We can go into that. And also there's a link here on the page for a one-on-one consultation. You can reach out to our team and have a complimentary one-on-one consultation at solo401k.com/consult. That way, if there's some specifics or some private information that you need to share outside of this public forum, then we can certainly do that. But yeah, I think let's open it up for some questions.
Thank you so much, Rachel. I've got a list of questions and people have questions. So I'm gonna go through some of the questions that I've seen in the chat box and some other questions I want to make sure we get answered. As a peer and as a fellow CPA, I can understand and appreciate your passion for completing IRS documents as your life mission. So we have something to bond over.
Definitely.
Can you? Somebody else asked, can you also contribute in lump sum pension funds?
Yep. Yeah, you can do a lump sum pension rollover. That's totally fine.
Yep. Awesome. And then somebody, a couple of questions about fees. Can you back up I think people wanted to see the fees again.
Oh, sure.
If you open up accounts for your kids, are they at $4.98 each?
So you should be able to see my screen now. I've just got it on the fees page. And yes, each account has its own distinct setup. So it's $3.99 plus 99. We sometimes can do volume discounts. We do work with quite a few CPAs, attorneys, financial advisors, et cetera. If there are bulk accounts that you want to open, that's the discussion that we can have depending on the number of accounts that are being opened at one time.
And can you share one more time the address to get a consultation?
Absolutely. There you go. You should be able to see that on my screen now.
Awesome. So can you also speak to how somebody might use debt to purchase assets for their 401k? Are there any certain lenders that you might recommend?
Yeah, it's a good question. So specifically when we're talking about like real estate. So I've done deals where I'm doing cash deals. I'm buying a property with all cash that I have to cover the purchase. Or I've also done deals where my 401k needs to get a mortgage. There is a special process to this. You can't do a normal mortgage, 10% down, tends to be higher LTV for those real estate investors with us. For those that are not real estate investors, what that means is loan to value, right? Usually you have to make a bigger down payment when your 401k is getting a mortgage. We have a couple of banks that we work with. Solera National Bank and Titan Bank are two that are excellent. And if you go to our website at solo401k.com, we make this information publicly available. You can see these different non-recourse lending resources that are really helpful.
When might somebody want to invest through a wholly owned LLC by their 401k? Is it necessary?
Can you tell me a little bit more what you mean by that?
Sometimes some people, especially checkbook control people, will have you open up an LLC that's 100% owned by your retirement account.
Yes, really good question. And I will find, I've got a nice little diagram on my computer. So I'll make small talk while I'm looking for it. I use this structure myself for holding my properties. So I use a 401k trust for a lot of deals that I do. For example, when I have here, I'm going to go ahead and share this one moment. I'm going to share my screen here for 1 second, and then I'll show this diagram that I think will be helpful here. Okay, so for a lot of the assets that I hold them in the name of the 401k trust. So you can see here, for example, a bank account, I'll title in the name of the 401k trust. A brokerage account, I'll title in the name of the 401k trust. And I might hold other various assets in the name of the 401k trust as well. I like to use a special purpose LLC. It's just like you were talking about, it's 100% owned by the 401k. I really like to use that for properties. Why? Because I am a real stickler for privacy and anonymity. When you buy a property, usually the property owner is going to be listed on the county or the municipality website, right? You can look up who owns the property, who has the deed. And if they see the words trust, sometimes that can be, attractive to less savory characters who want to try to go after trusts thinking that they have a whole bunch of money or something like that. And also, I like to have a bit of separation between my assets. I'm not worried about dollars or stocks or Bitcoin trying to sue me. But there are certain liabilities that you need to take into consideration when there's other people involved, like if you own a single family residence and it's got a renter or a tenant in there. So a lot of times I will use an LLC specifically for investing in properties. That LLC has its own special bank account. It has its own tax ID number. And that way I provide a bit of separation between me and my assets, or between my trust and my further assets. And we can form those special purpose LLCs for you as a part of the 401k plan setup.
Thank you. I've got 10 more questions. I'm going to try and get through you.
Okay, lightning round.
Time we've got. Do you handle 1099s and the annual filing of the IRR 5500 for the 401k?
Yes.
Perfect. If somebody invests in an active business that makes them subject to UBIT, do you have a professional or do you recommend somebody to help them with the tax filing?
Yes, we have a list of solo 401k literate CPAs who can help with the 990T filing.
Perfect. You mentioned that you can contribute up to 25% of the business earnings, but can you also speak to the 100% contribution of after-tax contribution of funds? So my understanding was you could go up to $58,000 as long as you paid yourself a salary of $58,000. In your example, you said up to $40,000. What's the difference there?
So you can't contribute more than you earn.
Yeah.
And your total maximum contribution for a plan cannot exceed that 58,000, assuming you're under age 50, right? So if I make 100 grand, then as like a W-2 employee of my own S Corp, I have to decide, preferably with my tax preparer, how do I want to slice and dice that contribution? What's my goal? Am I trying to maximize tax deductions, in which case I might do the 100% of that 19.5 employee contribution tax deductible and the employer contribution tax deductible as well. Is my goal to try to stuff as much into the Roth as possible? In that case, I might do a mix of Roth and the after-tax contribution. That tends to be a very personal decision, and that's why we recommend that you work with your tax preparer when you're figuring out how you want to denote those contributions into your plan.
The after-tax, so I know there's 3 different buckets with the solo 401k, the traditional employee part, the employer part, and the after-tax part. My understanding is the after-tax part can come from personal funds and it's treated right like Roth. Is there a functional difference between Roth and after-tax funds at some point?
There is, and I do want to make a slight correction because I tend to be very nitpicky when it comes to language. So the voluntary after-tax contribution can't come from personal funds, as in you can't just shove money from your savings account into that after tax. It still is tied to your compensation from your own business. So you can't just take money from your savings and put that into the after tax. You have to have been compensated as an employee from your own business, and that you can put into the voluntary after tax. Now, for those of my Nabers Group team members that are on here, you'll hear me say my rule. Put this in your brain. All after tax, wait, let me say it the right way. All Roth money is after tax. Not all after-tax money is Roth. Roth is a designation of after-tax. So when you make those voluntary after-tax contributions, they're not Roth right away. You have to do a little bit of paperwork to get them to have that Roth designation. Why does that matter? If you just left it as after-tax, the contributions would be tax-free, the growth would be taxable. That sucks. That's dumb. Put it in as after-tax, do the paperwork. Our team can help with that. Switch them over to the designation of Roth, then the contributions and the growth are tax-free.
Excellent. Can you assist with Coverdale or HSA accounts, or are you strictly 401k?
Right now, we're strictly 401k and IRA, but CESAs and HSAs will be available in Q1.
For anybody who has employees, are you able to help people with a traditional 401k, or do you have somebody you recommend who can help with those?
We don't have a recommendation right now for traditional 401ks only because, and it's not their fault, but the traditional administrators for 401ks are not going to let you invest in Bitcoin, real estate, private placements. It's just not something they can accommodate right now. So until that happens, we're not going to have a recommendation for a TPA or a service provider for the normal 401ks.
Do you know of anybody that helps provide valuation discounts on moving assets from traditional to Roth accounts?
Yeah, discounted Roth conversions, most of the CPAs that we recommend can help with that.
Wonderful. Can you speak to having multiple 401k accounts? I understand you can do one per control group. I know in one case, a financial advisor is questioning whether or not you can actually contribute with more than one 401k. Is there any guidance that you might point them to? Maybe.
Well, I think it is a controlled group issue, which is probably outside of the scope of what we're going to talk about today. So if you're in a controlled group, then you should probably have one 401k plan for that controlled group. Or if you have multiple plans for that group, you have to be really careful to not accidentally over contribute. If you have multiple employers that are not part of the same controlled group, you can have multiple 401k plans, and then you can max out your contributions per employer.
Thank you.
That's kind of like a whoosh kind of a question for most normal people.
You're good. You're good. I think that's that's functionally the questions that I had for you today. There was a couple others that were in the chat box. Can active investments currently held in a self-directed IRA be transferred to the solo 401k? Can you transfer the asset just instead of the cash?
Absolutely. We've got people that transfer notes, properties, active investments, private stock certificates from SD IRAs to solo 401ks all the time.
And is there a limit to the Roth component each year? Can you max out just $58,000 between the Roth and after-tax contributions with paperwork to get that into the Roth?
Absolutely.
And you can do the paperwork after tax. Yeah.
Yep.
Cool.
Yep.
I think that's the questions for everybody. Thank you so much. I know that was a whirlwind of stuff, but there was so much value you just gave. If everybody could just unmute and give Rachel a big thank you, that would be great.
Thanks, Rachel. That was fantastic.
Thank you.
Thank you.
My pleasure, guys.
You.
My pleasure. Feel free to find us at solo401k.com, and we'll be happy to answer your questions.
Thank you. Perfect. We can stay on for a moment and handle a couple other things. Thoughts, feelings? That was a lot of information in an hour's time.
Keith, are you aware of any calculators or examples that would kind of illustrate the use of like a solo 401k versus, self-directed IRA or any of the other mechanisms that are out there?
You mean in terms of tax-free growth or how to get contributions in?
I think that the overall growth, like what's the value of each mechanism or vehicle as you compare them to different scenarios?
So it's like both, if I'm comparing two vehicles, they both have the same characteristics of tax-free growth. They both have traditional components. They both have Roth components, except the difference is probably the IRA is the Toyota, while the 401k is the Audi. It has a lot more features, a lot more things that will benefit you as a result. So that's where you've got the $50,000 loan that you can take. You've got the fact that you can invest in apartment syndications and you don't have unrealized debt financed income. You've got the fact that if you do a prohibited transaction in an IRA, it like destroys the entire IRA. 90% of your balance will likely be lost between taxes and fees, versus a 401k, you lose 15% of whatever the amount invested is, not the entire amount total.
Hey, Keith, you had mentioned Solera Bank in the past. Was it for this, or was there something else Solera Bank does?
For this, specifically for IRAs and 401ks. They're a group out of Denver. I compared them and Titan, the other recommendation. They're actually out of Dallas, where I'm at. But between the two, I like Solera more after I dug into things. And that's why I went with them, even though they're farther away. But they're both set up to do business remotely.
I looked into both as well and looked at a lot of the forums, and it did lean more towards Solera as well.
So does that mean
Everybody
we
else.
set up our 401k with Nabers and they set up the bank for the 401k in Solera?
Actually, you can set up the bank, and that's what I like about it. I've got direct access to the bank account. There's a few security loopholes, like they want to send you a text and stuff before you send out wires. But I like the fact that I've got direct control of the bank account to go send wires wherever. It makes it super efficient for doing real estate or syndication deals as an investor.
Right, I got you. That's the checkbook control portion. I'm with you.
Yes. Yeah.
Okay.
Self-directed. Yes.
Keith, I joined the call very late, so I look forward to listening to the replay. Is this option kind of an alternative to the Seth option?
The solo 401ks are a great option if you don't have employees. And so if you do have employees, this is going to be tougher to use what she's got, or maybe that we'll do a separate call on maybe how to have a spouse or somebody else who can own the business, and you as the spouse aren't directly involved. So we can talk about loopholes, how to get around having to do a traditional 401k. But there's two other options I'm vetting right now besides Seth, right, as options to 401ks. Actually, we sent two over to John Hire on Monday, and we're talking about through some of those options.
Thank you.
Keith, I met with my traditional, well, I guess the guy who manages my brokerage account today. And he had originally set me up with somebody who set up my solo 401k for startups. And then today he introduced me to somebody else he calls a TPA to do a reinstatement. But I wouldn't need to do both, right? Couldn't I just have solo 401k reinstate my other plan? Because they said it's been like 5 years or something after restate it.
But my understanding, Vanessa, is you have employees, so you may not qualify for the solo 401k.
No, I don't have any employees. They're all contractors.
Okay.
It's just me and my husband and kids are.
We'll leave it like that. Sometimes people are not always, I'm not saying this is your case. Some people will classify people as contractors when they might technically be as employees, but I'm not going to touch it any further than that.
Yeah,
And so
I'm particular about that. Like they have other accounts besides mine. Yeah.
Perfect. So based on that, no, I think you only just need the one plan. And based on that one plan, you may actually want to move your assets to somebody like the Nabers group with solo401k.com. The issue with that kind of provider for a financial advisor is they don't typically get to make their fees. So a TPA, a third-party administrator, is going to have some sort of arrangement back and forth, and so they collect fees.
Yeah.
And what the Nabers group is doing, a $400 setup fee plus $100 a year, that's really, they're leveraging all the technology they've done. They don't make a lot of money, especially if they're doing consultations in addition as just part of this. That's why I think it's a really friendly structure for what it is and why they leverage technology and their education center so much to help people. And it's actually been really good because I did it for a family member and I was able to follow it really easily. And so was he. And the family member I'm thinking of is not super tech savvy.